Mahalo, everybody. I'm Josh Stone for Inside Maui, where we find those hard answers for the tough questions. We'll see you soon.
You are Inside Maui. You're inside. You're on the inside. Inside Maui. Stay tuned.
How will you protect these workforce homes? Because I guess affordable is kind of the wrong word for it, isn't it, in a way?
Well, it's called workforce housing.
Right.
Yeah.
How do you protect those workforce houses from speculators?
Well, they have these buyback clauses, so that you can't sell the home. And I think what's in the bill is 25 years.
Wow.
So it's pretty steep.
Wow.
Because it didn't make sense before. I've seen housing agreements where the buyback was like as little as 2 years.
Yeah, of course. A
So-
speculator can wait 2 years,
Yeah.
no problem.
Not a problem, right? Yeah, but they worked on some things where the person in the home, and there are many reasons why people would want to leave and sell their house.
Mm-hmm.
You know, they move, their family, there's all kinds of reasons.
How do you buy back then? How do you determine the percentage?
It's determined in the law.
So in other words, a set amount of return
Yes.
on the home.
So you're allowed to have a certain amount of equity, and I forget now if it's a percentage or if it's tied into a CPI or something like that.
Right.
But there is a way that the owner of the home can realize some equity built in for the length of stay. Like maybe 6% a year. So it's not like you go in there, you buy it for $200,000.
Right.
You have to sell it for $200,000.
Right.
You're allowed
I
the
understand.
profit.
That makes sense. That's interesting.
And it has to be sold to a person who qualifies for the affordable.
And what's the qualification process?
It's an application process that I'm not sure who's going to be running it. They talked about the county running it, or the developer, as part of their housing agreement, would have to ensure that those affordable workforce homes stayed in the same bracket. Mm-hmm. Now, theoretically, each year the HUD bracket goes up, so it's not like you aren't going to have anybody that qualifies for the home. And for a certain amount of time, you keep it in that bracket. If there are no takers, then the developer or the county is allowed to go to the next higher bracket. So it's in brackets of, I think, 10%. So if like 100% goes to 110%. So if nobody takes it there, then you can sell it at 120%, a median, or whatever.
Wow. Interesting.
So it's more than
It's a lot more complex than black and white,
than just
50%.
Right.
That's very interesting. Another thing that affects affordability is the property tax situation. As you know, if our present system, if a investor, let's say, goes into a specific area, buys up property and inflates the values and sells the property for millions, sitting next door to an old-time local Kama'aina family, their property value skyrockets along with the investor. Right. And their taxes skyrocket. And a lot of situations, I think we're seeing local families actually running out of room here. Their property taxes could potentially put them out of their homes.
Could, yeah.
And so what's the solution there? How do we help those families?
Well, we've been working on that particular solution. We have not had the time to really look at our whole property tax system. And there have been many suggestions about what we should do, that mass appraisal isn't the way we should go. The stopgap measure that we've been using is to increase the homeowner's exemption. So as the property, it's not the taxes that go up, it's the assessments. So that's how much your house is worth.
But the tax is based on the assessment,
right? The tax is based on the assessment. So there's a tax rate and a tax assessment.
Right.
So what we did last year and other years too is we increased the homeowner's exemption. So I think it's now up to $300,000. And they can take that off the top. And we tried to balance that with also a tax rate decrease. And last year I think it went down to $2 and something from $3 and something, to try to even out the taxes that these homeowners were having to pay. So that part kind of got taken care of. There's some odd ones here and there. The one group that didn't get taken care of, and I hope we're going to do it this year, is the owners of rental units that rent to workforce housing people. So that, their assessments have gone up, and while the homeowner, who has to be owner-occupied, gets a tax break because of the increased exemption and the lower rate, the homeowner who doesn't live in his home and rents it, or her home, doesn't get that benefit. And we ran out of time last year, just because of the nature of our budget, to really work on something that made sense. Because we certainly don't want to give it just across the board. And there's a thing called like a regressive tax. And if you were to knock down the rate per thousand, it benefits the person at the high end more than at the low end. But if you increase the exemption, what they can lop off the top, it benefits the lower value places than the higher value.
Understood. That exemption, though, when you file for the exemption, it takes a year. It takes a year to the next round. And
yeah, there's a lag on that.
There's a bit of a lag, huh?
So we're trying to fix that lag part. I didn't even realize about that there was that period of time that there was such a lag until I started getting some letters from people saying that they're still telling me I have to pay this and then I'm going to get credited toward it for the next year and et cetera, et cetera. And we had real property tax come in and explain it to us, and they did a relatively good job explaining it, but explaining it and saying it's the right thing is two different things.
Exactly,
so I think the council this year is also going to be looking at that because we all got the same letters as council members.
A question about the units that have already been promised to the county as affordable from the past. I understand there's 4,400 units or something that basically are unaccounted for. Is there any possibility of recouping those units at this stage?
I don't know. It would depend on who owed it and if they're still around.
Still doing business.
Yes, and if their sale agreements included and recognized the fact that there were these affordables that were owed. So every single one of them is like an individual case, and I think the housing department and the planning department was trying to work together on trying to discern who owed what and are they still around. I mean, there's some companies that are no longer here that owed.
Gone.
It wasn't put into their purchase agreements that they had these outstanding obligations to the county of Maui. It was not a lien on the property. It was not recorded, and the Bureau of Conveyances that said before you sell this property you have to do X, Y, and Z. So everyone has a little quirk in it that's a little different, and getting the bottom of it.
County has no teeth on it, do they?
No, I don't think so. No.
Can't bite into them.
No. I think if we had teeth, it would have been taken care of already.
A long time ago. Aloha, I'm Josh Stone, and you're watching Inside Maui on MauiToday.tv.